My name is Eric Eggert. I'm with Mackoul Risk Solutions. Thank you so much for attending this webinar. I recognize some of your names from previous webinars, so thank you for coming back. Some of the newer names, maybe you've seen some of the other webinars we do at Mackoul, so maybe welcome back and happy you're joining me on this one. Today we're talking about rate hikes and risk trends. But throughout the presentation, the Q&A section on your Zoom will be open, and I have that up on my screen, and I'll try to pay attention to that. If I see a question pop up, I'll answer that. If not, maybe we can answer some questions at the end, or you can always reach out to me directly after if you have a question or want to go more in depth with something. Our presentation is going to be recorded today, so that if you weren't able to make it, or someone in your office or one of your boards or anything like that can't make it, we can share it with them. And at the end of the presentation, we will be selecting somebody to win a $50 Amazon gift card, and we will contact them later on in the day. So without further ado, let's get right into this. A lot's been going on in insurance lately. Some of it's been going on for the past few years. Some of it's newer in the past few months. But overall, the summary of what's going on in the industry is premiums are going up. And there's a lot of reasons for that, and we're going to get into some of those today. So let's get into it. First, we need to know a little bit about the insurance markets in general. There's hard markets, there's soft markets, there's normal markets. Essentially, insurance is very cyclical, meaning those markets, they come and go, they come back, round and around it goes. Right now, we're in a hard market. So a hard market is when carriers typically aren't as competitive as they used to be for a number of reasons. They don't want to, carriers aren't willing to take on new risks. They aren't willing to take a risk on things that they wouldn't normally get into. And basically that kind of diminishes the competition and limits the amount of carriers we can go to and limits the options for you as consumers. So we still try to go to all those carriers. They just decline us. Say, sorry, we're not interested for XYZ, and they provide us a reason why. And there's a lot of different things that contributed to a hard market. I'm sure some of you started noticing that has happened right around COVID. So COVID did contribute to this, but it did start a little bit before that, and it's only gotten worse and worse year and year since then. So I mean, now we're 5 years since COVID, and we're still talking about COVID, and we're still talking about the hard market. But how did we get here? So social inflation is a big reason that premiums started going up. Social inflation is when jurors start awarding higher payouts to claimants. So someone gets injured, they sue the building, which they're suing the insurance carrier. The jury decides, yep, this person's seriously injured. Let's give them X amount of money. And that dollar amount has increased drastically over the years, contributing to social inflation. Obviously, there's regular inflation as well, cost of materials, things like that. I mean, that was huge the past few years, supply chain and cost of lumber, cost of building materials, all that skyrocketed. And at times it was even higher than it is now. So that's something that contributes it, because if in the event of a total loss, they have to rebuild your building. If it costs more money to rebuild their building, they have to offer you more insurance. If they're offering you more insurance, they have to charge you more money for it. So like I mentioned, insurance companies are kind of tightening their guidelines. With fewer carriers out there, there's fewer options for us to find savings. There's a big increase in natural disasters. Every time you turn on the news, it seems like that natural disaster is bigger and badder than the one before it. Most recently, it seems like it was the wildfires out in California. And I know what you're thinking. Why do the wildfires in California have anything to do with our premiums over here on the East Coast? Well, how the insurance carriers look at it is they look at the habitational industry as a whole. How is the market? How is it going? Are they profitable on the habitational risks? Do they need to adjust things? Obviously, different regions have different ratings. Where some of us are on the coast, we have to deal with wind and flood. Over there in California, they have earthquakes. So, I mean, depending on where you are in the country, different things will hit you. But overall, they look at it as a whole, as that industry, and that's how they kind of come up with, do we need to increase our premiums? Now, it's not just the insurance carrier saying, hey, we need to increase everything. Insurance carriers go to something called reinsurance carriers, which is the easiest way to describe that is essentially insurance for insurance carriers. So when the reinsurance carriers and their actuaries sit down at their desk and come up with their formulas and do all the math and the science and data research behind everything for premiums, they take all that into consideration to come up with a premium. And when the reinsurance carriers increase their rates, they pass that down to the insurance carriers, and the insurance carriers pass that down to us as consumers. So it's a vicious cycle, but unfortunately, that's just kind of how that goes. And essentially, insurance carriers companies will tend to kind of forego premium growth. They kind of say, you know what, we're not going to be as aggressive to grow in premium. We want to focus more on profitability. So they focus on more favorable risks. And we'll get into what favorable risks are. The umbrella market also changed. So it wasn't just one specific sector. You know, I'm sure you saw your property and general liability premiums go up. You've seen D&O go up, but umbrella was probably the biggest market, the biggest policy that got affected. And that's because a few years ago, I'm talking, oh God, I used to say it like it was last year, but now it's, 6-7 years ago. You could get $100 million umbrella limit. Everybody could get it. They'd approach an umbrella program, and each individual building in that program had their own $100 million limit, and premiums were very, very low. I'm talking an average of $1,700 per year. I mean, that's even higher than some of the buildings saw. I mean, I remember seeing some in the 1200s. Obviously some are higher if they were bigger buildings, but it was very easy to get a $100 million limit for basically nothing. And you probably didn't need a $100 million limit, but it just made sense to have it because it was so affordable. And unfortunately, some carriers started pulling out of the market because they realized they were pricing these umbrellas way too low. Now, for a claim to get to an umbrella, it has to be a huge claim. Typically, it happens on the general liability side, which is usually like slip and falls, trip and falls, things like that. But when the carriers were pricing this out, they kind of didn't take into consideration, well, okay, well, the general liability is going to cover that first million. We're going to cover anything over that. And now we're talking huge claims. We're over $1 million. Anything over that, the umbrella is kicking in and covering for liability. And the carriers just got beat up. They were losing a lot of money. Anytime that they had to pay on a policy, it was well over the premium. So they priced themselves out of the market and weren't able to compete anymore, and that product was no longer available. A few other umbrella market carriers saw what was going on. They followed suit. And now we're in a situation where there's still $100 million options out there. They're fewer and further between. Some are specialized programs where you have to also package the property and liability with that program. Others, you're able to do it, but your building has to be clean. No claims, no violations, maintained properly. And we'll get into some of the maintenance things in a little bit. But if you're not one of those clean buildings, or you have something on there and your options are very limited. A lot of these carriers are coming out with $5 million umbrella limits, and they're saying we're not going to offer a premium lower than $25,000. So it went from paying around $1,700 for a $100 million limit to very, very common to be paying over $25,000 for just a $5 million limit. So, I mean, it was a huge shock to a lot of people. It continues to shock people when they see it, because it doesn't seem to be getting any better. It seems just kind of be progressively difficult to find an umbrella carrier, especially, like I said, if your building has any hair on it. And with that kind of came excess. The excess policies have always been around, but the emergence of them seems to be a lot more prevalent now with this umbrella issue going on. So what's an excess policy versus an umbrella policy? Well, an umbrella policy is generally going to extend and sit over your general liability, which again is like trip and falls. It'll send over your D&O, which applies to the board of directors and the directors and officers policy, and also workers' compensation. Whereas an excess liability policy is typically only going to extend the underlying general liability policy. It generally won't sit over the D&O, won't sit over the workers' compensation. So it's important to know what you have and what's covered. So that's just something to keep an eye out for as well. But what can be done to limit these huge premium increases that we're experiencing? So there's a few things. You can minimize claims. Now, I know a lot of times claims are out of our control. I understand that, but we got to try to minimize them. So by maintaining your building, maintaining your sidewalks, making sure people aren't able to trip and fall, making sure that there's clear paths to exit the building, things like that. Just things that you can do to your building to try to minimize claims. And here in Mackoul, if you ever need anything, we could always come out to your building and kind of do like a risk assessment with you. Say, hey, this looks like something you might want to get taken care of. These sidewalks look a little uneven. These stairs are broken. Things like that. We can kind of come out and look at, try to help you with. You can also consider increasing deductibles. You can, like I said, maintain the building's huge, electrical systems, roof maintenance, keeping up with building violations, loss recommendations from insurance carriers. These are all things that we're going to get into much more here. So the claims and deductibles and trying to minimize claims. Like I said, we could come out, take a look at your building, see what we can do to try to minimize it. But claims, once filed, will impact your building negatively for 5 years. The carriers look for 5 years of what's called loss runs, which is your report of your claims history when they're looking at potentially offering you a quote or rating your premium. So any claim is bad, but really the frequency of claims could end up biting you more than that one big fire claim. Obviously, that one big fire claim is going to still impact you, but when carriers see year after year multiple burst pipes, multiple water damage claims, they know it's only a matter of time before that shoe drops and it's a huge claim, and they don't want to be the one that's left on the hook having to pay that out when the writing was on the wall for the past 5 years, maybe even longer, but they only look 5 years of continuous frequent claims of pipe bursts. So when to file, when not to file. There's really no such thing as putting a carrier on notice. Sometimes people call us up, they say, hey, this happened, can we put the carrier on notice? And you can't really. It's either file the claim and they do their investigation and they either pay the claim out or defend the claim, or we don't put the claim in at all. So I mean, we generally will talk to you about it, when to file a claim, when not to file a claim. With D&O issues, it's very important to always put that claim in because those are claims made policies, meaning that the policy for which the claim was made would be the one to respond, and they could deny it if it's the carrier's changed. So I mean, you kind of want to stay with the same D&O carrier as long as you can. And if there's mold involved, or I'm sorry, water involved, we typically recommend that you always file a claim as well, just because there could be mold or further damage behind the walls you didn't necessarily see when it first happened. So those are two that we really push for. Other times we kind of talk to you and we try to figure out what's best for you in a given situation, because they do result in premium increases. They could result in non-renewals if they're severe enough. And it doesn't always make sense to file a claim. If the damage for the total loss of the claim is $7,500, but you have a $5,000 deductible. Well, after you pay the $5,000, the insurance company is only going to pay $2,500, and your premiums could go up more than that for the next 5 years. So it didn't really make sense to put that one in. You just pay that out of pocket. The trouble with paying things out of pocket is you sort of set a precedent. So if you do that for one unit, you might need to do that again for a different unit, because all of a sudden, if you do it for one and not another, they could start saying, well, you discriminated against me because I'm a man and you did it for her and she's a woman. So there's claiming that the board committed sexual discrimination. So, gender discrimination based on sex. So that's another thing you want to look at. And increasing the deductibles, that used to be a lot more lucrative than it is today. You used to be able to increase your deductible from $2,500 to $5,000, and you would save over $2,500 for that policy year. Now we're talking about, if you do that, it's only a couple $100s. So yes, it's nice if you're really desperate, but all it takes is one claim for you to be in the red by doing that. So I mean, it's something we have to consider. It's something we have to talk about, discuss with your brokers and see what your options are available for that, and see if it makes sense for you and for your building. Electrical upgrades are another way to either get denied by a carrier or non-renewed by a carrier, and also to save money on premiums, because there's a huge problem out there called Federal Pacific Electric stab lock circuit breakers. So Federal Pacific Electric is a company that back in the 80s, they were installing these stab lock circuit breakers all over the place. And it turns out that they weren't working properly. They wouldn't trip, they would overload, they would get hot, and they would cause fires. So Federal Pacific Electric went out of business. A lot of buildings have these, and a lot of carriers do not want to touch them. So you're basically eliminating yourself from any admitted carrier. Admitted means they're backed financially in your state. They offer better coverage. They offer lower premiums than a non-admitted carrier. And a non-admitted carrier is basically the only one we can go to for these stab locks, because carriers know they're a problem. Now, I get people all the time, boards that say, you know what, ours are fine. They haven't had a problem in 40 years since they've been here. Why is this an issue now? So, okay, well, get an electrician to come in, inspect it, and provide me with a document on their letterhead stating that they inspected these Federal Pacific stab lock circuit breakers and that they're in good working order, and we should be all right. I haven't seen one electrician that's willing to do that because they're not going to put their name and business on the line saying that something that they know isn't safe is safe. Even if they've tested it 100 times and every time it tripped, they're not going to write it because it only takes that one time for there to be a fire and for them to be on the hook saying that they said it was safe. So they don't want to do that. So stab locks are the most common, but there are others out there that we've seen that we've run into, like Zinsco and GT Sylvania. Those are just to name a couple others that are the carriers have problems with. Those are not as common as the Federal Pacific Electric stab locks. And I mean, these aren't the only things that are a problem. Carriers are getting fed up with fuses. There's different types of fuses. Some don't want cartridge fuses. Some don't want safety fuses, which are like those screw-in fuses. Um, and the best way to know whether there's a question that popped in. It's just going back to stab locks quick. The best way to know if you have stab locks or not is to look at the panel. The FPE brand is on there. That stands for Federal Pacific Electric. It'll be branded with that. And a lot of times I wish I had a picture here, but the tip of the actual stab lock is red. Like the tip of the switch is red. That's another kind of sign that they're there. That doesn't mean that just if you have a red one, it's guaranteed, or the tip is red, it's guaranteed that it's a stab lock. But that is a sign of them as well. But generally, it's all the boxes are typically branded. The electrical panels are branded by who the company is and provided it. So it'll say right on there FPE or Federal Pacific Electric and have their logo on there. And like I was mentioning, the fuses are becoming an issue as well. Some carriers don't want anything to do with your building if they have fuses, which again kind of sends us to that non-admitted market. So upgrading your electrical could be expensive, but it opens the doors to a lot more carriers. You have a brand new electrical system. The carriers want to see that. They know that there shouldn't be any issues. So that's something to keep in mind. Building violations. This is for New York City only. So if you're in a different state, you got about 2.5, 3 minutes to zone out. But building violations are becoming a huge problem in New York City and the 5 boroughs. And basically, what they are, there's a couple different types. There's the Department of Buildings, the DOB violations, and there's the Housing Preservation Department, the HPD violations. And what they do is there's a number of different ways that they actually issue these. Sometimes it's complaints by unit owners. Sometimes it's routine inspections. Sometimes it's failing to file proper paperwork that these violations are issued. So there's all sorts of different reasons for them, but they're all a problem. And I mean, some of them are really old. This is only sort of in the past year becoming something that umbrella carriers were starting to be concerned with. And now we've started seeing that property and liability and package carriers are starting to become concerned with it as well. And their concern is they feel like the building may not be being maintained properly if there's a lot of violations, and the severity of them, it could be something that really turns them off. So they decide, you know what, we're not going to offer a quote, or in some instances, if they're already on the building, they'll say, you know what, we're going to non-renew when renewal comes up. Thank you for your business, but once these are cleared, you can always come back to us, type of thing. And there's a bunch of different types of them. Mold, bed bugs, expired fire extinguishers, local law work, unsafe fire escapes, elevators. Again, unit owner complaints are the worst because they'll say, oh, my heat doesn't work, and then they will refuse to let you in to fix it or to look at it, and they file more complaints, and then they aren't helpful in trying to let you in, and the issues just go on and on and on. Another problem is the DOB will come in because they have to clear these violations for you. So they have to come in and inspect to make sure that they're done. Well, what I'm hearing from a lot of property managers is they come in, inspect, and they clear those violations, but then they issue 5 more. They say, oh, well, they saw this while they're here. So it becomes another ongoing problem. There are companies out there that help with getting these violations cleared, and we really recommend getting them taken care of. There's websites you can go to check and see if your building has violations, what type of violations, how old they are. In some instances, you can see what unit they stem from. But you want to address them as soon as possible because it does interfere with your insurance policy, and it could make it harder for us to find you a competitive premium. So definitely get those taken care of. And like I said, it is unfortunate. It's a process, and it's just another thorn in our side when it comes to issues with insurance. Loss recommendations. These are issued by the insurance carrier, and they are getting stricter and stricter. They we keep saying they shouldn't be called recommendations. They should be called loss requirements, because 9 out of 10 times they are required, and they aren't just recommendations. They do put different levels on them, the carriers. Some they say are required, some they say are urgent, some they say are mandatory or suggested. But depending on the carrier, it's required. Um, and there's a whole variety of different types of things that we see. One is upgrading your stab locks. That's a big one. Repairing broken sidewalks, installing AC brackets under air conditioners so they don't fall and hit somebody on the sidewalk, installing emergency lights and exit signs, or even just something as simple as clearing storage or debris from in front of the boiler room or out of the stairwell, so that it's not a fire hazard, or so that people can escape the building quicker in an emergency. And carriers are starting to issue non-renewals or notices of cancellation for non-compliance with loss recommendations. We actually had a carrier tell us that starting later this year, once they issue a cancellation or non-renewal for loss recommendations, they're not going to rescind it, even if there is compliance on those recommendations. So that's a hard line. That's the most extreme one we've heard. It hasn't started yet, starting in a few months, but it's once one carrier does it, usually a lot start following. So it's scary because these recommendations are intended to prevent claims, um, and they can cost more money. Sometimes it's you switch to a new broker, and all of a sudden you get hit with loss recommendations. Well, here at Mackoul, we like to go out to your building in advance, inspect it, do a walkthrough, and kind of say, hey, these are things that could show up on your as a loss recommendation. Or you know what, you don't have emergency lights or exit signs. We know what carriers to go to that aren't going to make that a requirement, so you're not going to have to spend extra money installing emergency lights or exit signs, because we're only going to go to carriers where your building fits. Now if all of a sudden you want to go to one of those other carriers, well, if their requirement is emergency lights and exit signs, then you're going to need to have those installed. Otherwise, they're going to issue these recommendations and most likely get off your account if you do not comply with them. So again, upcoming renewals, whether it's a new to that broker or you're with the same broker for 10 years, carriers are getting stricter. They're getting out there a lot more often. They're doing interior inspections where they'll schedule it with you, the board, the property manager, or the super. They're doing exterior inspections by not even telling us or you that they're going to do it. And they'll just walk by the building and say, you know what, there's no AC brackets here. That fire escape looks a little rusty. The sidewalk's broken. And all of a sudden we get recommendations, and there wasn't even a formal inspection of inside the building. They're just exterior inspections. And that's when they then issue the loss recommendation, and they expect a response within the first 30 days of receiving it. Even if that response is just, hey, we've received it, we've acknowledged it, we're working on it, here's our plan, we'll follow up again, we'll let you know when it's done. So they follow up after those 30 days, and if they don't feel like things are being complied, or if it's a much more serious loss recommendation, then they start issuing the notice of cancellation, or depending on when it is in the policy, they may say, you know what, we're going to go ahead and issue a non-renewal at the end of this term, and we're sorry that you weren't able to do these things. So basically, once that non-renewal notice is issued, some carriers will allow, or that cancellation is issued. Majority of the carriers will still allow us until close to that date to issue compliance. Again, as I mentioned earlier, there's a carrier saying that in a couple months, that's not going to be the case for them, and it's only a matter of time before their carriers hop on board with that. And once your policy is canceled for something, when we go to replace canceled or non-renewed, when we go to replace it with a new carrier, on their applications it says, has this account been non-renewed or canceled in the past 3 to 5 years? We say yes. If yes, why? Oh, non-compliance with loss recommendations. We leave it simple as that. Well, then the underwriter comes back to and says, well, what didn't they comply with? We let them know, and they say, well, we're going to have those same recommendations. Sorry, we aren't interested in offering a quote. So your premium ends up increasing drastically, and coverage can even be diminished as well. So it's important to do those recommendations as quickly as you can. I know they're a pain in the butt. I don't always agree with them. I had one, it was garbage day. The super brought all the garbage out to the curb, and it has happened to be an external inspection that day. And one of the recommendation was not to leave trash outside by the curb, and it was garbage day. So, I mean, some of them we can argue with and say, hey, this is a crazy recommendation. Like, your inspector has no idea what they're doing. I understand they're just checking boxes and filling out the forms, but there needs to be some thought process here. So we do try to push back. We do try to fight on your side, and we do try to get you extensions where we can. But they're tightening up and making this harder for all of us, and rightfully so, because like I said, claims are going up so drastically. Um, and that's really the extent of it. Is all those different things. If we just control it, minimize claims, maintain your building. Carriers want to see that. They want to see that you don't have claims. They want to see that you're doing routine maintenance to your boiler, that your roof's been updated within the past X amount of years. Some of them have the 20-year warranties, and they want to see that you're using that you're if there are problems, you're repairing it properly. You're not just putting a band-aid over a situation. So there's a lot of things that can be done to help minimize these premium increases, but unfortunately, right now in this hard market, they are inevitable. They're happening. It's not just you and your building, it's happening all over the country. It's hitting certain areas harder, like I said, but it's something that will change eventually. I can't imagine it going back to those umbrellas of $100 million for $700 million limits for $1,700 in premium. But we could see $100 million umbrellas being more common again, and maybe being that $25,000 premium that it's currently is for $5 million. I don't think that would be too crazy to expect something like that happening again in the future. But carriers do eventually soften up, and once they soften up, it creates the competition, and we're able to get them to compete against each other, which helps drive prices down for you as consumers. But again, I don't anticipate premiums going down to where they were a few years ago ever again. It seems like the carriers just underpriced things for a few years, got beat up, had to increase, and hopefully things are starting to steady out. And I know there's a lot of uncertainty in the world right now. Hopefully that doesn't have huge impacts on us back here, but it's anyone's game. Just like the stock market. No one can predict that. No one can predict how the insurance markets are going to be. We just kind of go off of trends. One of the questions that came in while we're talking here was back to the electrical. And there's another problem that is not as common as these Federal Pacific stab lock electrical circuit breakers, but aluminum wiring, where your building was built with aluminum wiring, where it's much more safe to have been built with copper wires. And the aluminum essentially just can't handle the load of the electricity, and it overheats and it causes fires. So a lot of carriers don't want that either. So that's a question that's on the applications. Is there aluminum wiring? And when we answer yes to that, they decline. So that kind of leaves you again in those non-admitted excess line markets, and you think it's expensive to upgrade your stab locks. Imagine having to upgrade all the wiring behind all the walls in an entire building. It is, I've seen proposals for millions of dollars in some of these buildings to upgrade their aluminum wiring, and they can't afford it. So they're stuck with these markets that don't offer as good of coverage, don't offer as competitive premiums, and it's really nothing else they can do other than accept it or do the upgrade. And the upgrade is just, like I said, astronomical, unfortunately. There's something called pigtailing that can be done that some carriers allow, where they essentially can still use the aluminum wiring. I'm not an electrician, so I don't know the exact, I might be explaining a little bit incorrectly, but they basically can attach copper wire to the end of the aluminum wire using their electrical mechanisms, and then connect the copper to the circuit breaker. And that seems to be acceptable for some carriers. They want to see that it was done by a licensed and insured electrician, and they might also require some pictures or documents to show that that was actually done. But that is a way around it as well. That's not as expensive as upgrading the entire building, but not all the carriers do accept pigtailing, unfortunately. But that is one way. And we can even approach carriers on your behalf before and saying, hey, they have aluminum wiring. They're going to get it pigtailed. If they get it pigtailed, are you willing to offer them a quote? In some cases, yes. Some cases, no. And so here is just a brief overview of some of the things we offer here at Mackoul. I mean, it's my shameless plug at the end. We have our online client portal. You can access your policies, your documents, certificates, different things on there. We offer free contractor insurance reviews for your building if you're looking to hire a contractor to make sure that the building, the property management board are all protected properly. You'll get a certificate of insurance. It says so and so, us as board members and property manager are additional insured as per written contract. If there is no written contract, you're not actually additional insured, even if that certificate says it. So we'll help make sure that you're, by reviewing contracts, by reviewing contractors' policies, making sure that you're protected as possible. We have employee benefits here and HR solutions for your businesses. We offer homeowners insurance monitoring for an additional fee where we'll actually monitor the homeowner's insurance in a building to make sure that all units in that building have insurance if it's required by their governing documents. We have from Mackoul School, which is essentially what you all just sat through today, different webinars, but we do have specially designed classes that are pre-made for that. And then we offer personal insurance as well. So we do a mixed bag here at Mackoul. And we just want to basically be an extension of your board and try to help you out as best as you can. Here's my contact information. If you have any additional questions, any additional concerns, please reach out to me. I'm happy to talk to you about any situation, whether it's our buildings or not. This, as a reminder, this was recorded. So if you weren't able to get in on time, I did see some people join in halfway through. So if you didn't get in on time, this was recorded. So you can fast forward, rewind, repeat all you want. And so if you would like a copy, please contact us. And good luck in the $50 Amazon raffle that we're going to be doing later today, and we will contact that winner accordingly. I really appreciate all your time. Thank you for coming out today. Like I said, stay cool. It's a really hot one out there, and we look forward to helping you out with any of your insurance problems. Thank you.